Hello traders. Today's video we're going to be talking about something I typically don't talk about, which is the fundamentals of various cryptocurrencies and how that impacts their price. What I've found from mentoring and from talking to a bunch of traders and investors is that those who have made hundreds of thousands of dollars or millions of dollars in crypto have typically been traders and investors who got in early on various cryptocurrencies and various tokens that had very good use cases. So basically what we're going to be talking about today is the patterns that you're going to see behind tokens and cryptos that tend to spike massively and how to really take advantage of those. Let's dive in. All right, traders, before we get into the nitty-gritty of use cases of various cryptocurrencies, let's talk about what are spot markets. A spot market is where you're actually transacting with the asset itself and not with a contract for the asset. A spot market means that if you buy Bitcoin, you actually own that Bitcoin and you can send it to any exchange you want. But if you use leverage to buy that Bitcoin, such as using perpetual swaps, then you don't actually own that Bitcoin. You just own exposure to a long position of that Bitcoin. So what typically is done here is investors will look for a very good project that they think is going to likely do quite well in the future. And then they buy at spot because then you can't be liquidated. You can't get margin called. You don't really have to worry too much about, the only worry you have is if it goes to zero, or if it's like the project that you invested in is a scam or a fraud, then the price will probably tank a bunch. But beyond that, really, time is on your side, and that's a pretty big advantage of it. So now let's talk about the first category, I would say, of the kinds of tokens that have made a fair amount of people a fair amount of money. So exchange-based tokens, I don't think I said that correctly, but I'm talking about tokens like FTT that we're looking at right here. Also BNB. You're going to see a similar pattern here. BNB, and then also something that you may not have heard of, HXRO. Cryptocurrencies like this, there are a lot of them, too many to name, to be honest, but each one of these has a different use case. So I know that BNB on the Binance exchange, it reduces fees if you buy their token. So if you think in the future that, let's say you think Binance is just not going to last, Binance is just really, they're not going to do too well in the future, well, you probably don't want to buy BNB. But let's say you think that there are still a lot of people who are going to come to Binance, that the growth is going to continue for the company, then buying their native token, BNB, USD, or USDT, however you purchase it with whatever collateral, well then, if you're right and the exchange continues to grow, then that price will likely appreciate. The reason that happens is because imagine a scenario where Binance doubles in users, right? Like right now, just twice as many people. And they all find out that you can reduce your fees by purchasing BNB. I think that that's going to incentivize a lot more people to start buying BNB than it is to, previous holders to sell it. Because a lot of those people are probably going to want to cash in on a cheaper price. And especially a lot of the times what can also happen, which is great, is when these exchange tokens dip, traders who are waiting to wait for that coin to dip so they could accumulate more so they can reduce their fees, buy more of it, which can cause it to rise again. FTT is similar. So yeah, we were just talking about Binance, but this is FTT. FTT is one that I think is poised for a lot more growth, especially as FTX continues to gain market share from other exchanges. I really love FTX. I gotta be honest and say it is my favorite exchange probably of all time. Fingers crossed. Just the versatility, everything works. The only thing that I think some people might not like is it's a little bit complex, and it's not good for beginners. It's just, you got to put time into it. But with me on FTX, I was looking for the price of FTT to drop because I wanted to accumulate more. I got a little bit of FTT, but I wasn't able to really get too much FTT because me and a lot of other traders were actually waiting for the price to drop so we could accumulate more FTT so that we could reduce our fees. Not only that, also when you stake FTT, there are even more rewards that you can get, such as airdrops. So these kinds of use cases where we have reduced fees, we have staking for airdrops, and plenty of other advantages, those tend to make the price rise. Because, like I had said before, each time that the price actually falls, what can end up happening is traders who have been waiting, potential buyers, just buy right back up. And that's what happens. However, I've said a lot of pros so far. Let's talk about the cons. Unfortunately, what do you notice in this picture? Let me see if you guys notice anything. See a similarity? August 2019. Let's go back. This is August 2019 to the present, right? Cool. August 2019 to the present. Pretty similar, right? There's a correlation. Yeah, unfortunately. I hate this. I hate that. I really don't like just how correlated everything is to Bitcoin. But there's a decently strong correlation. I think the reason for that is simple. Correct me if I'm wrong in the comments, but if Bitcoin adoption continues, more retail investors and hedge funds and institutions get in, more popularity, that's going to drive up the price of Bitcoin, right? Well, if Bitcoin's rising in price due to increased popularity, wouldn't you expect that exchange-based tokens to reduce fees in trading said Bitcoin would increase as well as more people are on the platform, more people want to buy that token? Maybe that's why there's a correlation. So that's one thing to think about. But let's talk about the coin I had introduced at the beginning. I am not promising that this is going to moon by any stretch. I actually don't even own any of this, to be like completely transparent. The one thing that I will say is that I really like the HXRO platform. It was a little scary for me at first. If you want to go find HXRO, just Google search it, go look at the exchange, click the Get Started button, and just kind of look at the TixWix contracts if you want. It's I wouldn't call it binary. I don't know the proper word for it, but it's a prediction market based on the price of 5 different cryptocurrencies: Bitcoin, Ethereum, Uni, YFI, and Link. Memorize all. Sweet. And you basically make predictions whether the price will be above or below a certain price, or it will touch or not touch a certain price by a certain date. Simplified options trading, basically. If you think that, two things. First of all, if you think that the popularity of HXRO, their platform, is going to just skyrocket, this token probably will skyrocket too. If the popularity skyrockets, of course. So that's one good thing. Another thing is, let's say that the HXRO team make a crazy good incentive for people to start buying the HXRO token. Like, let's say they do 20% off all fees if you own this amount of HXRO. What do you think is going to happen to the HXRO market? Probably going to rise. So it's incentives, it's popularity, it's use cases. All of these things are what you need to look into. And something that I've been neglecting, to be completely honest with you, I've been kind of neglecting kind of thinking less statistically and less indicator-based and sentiment-based, and just thinking more, what is the use case? What incentives are there for this cryptocurrency or token to rise? And if you can really think about that, then I think you can really become one of the first buyers of a lot of these projects. However, I would not recommend going all in on any of these tokens. I think that is a terrible idea. I think that a good cryptocurrency investor who's deeper into the community and sees these use cases, what you do, not financial advice, is you don't put all of it into 2 tokens. No. You find a bunch of good projects that you actually think have great incentives. You spread your money throughout them, and you just see how they do. Now, if the popularity of crypto just tanks, unfortunately, a lot of those cryptos might depreciate. But let's say that crypto stays just as popular, and those individual platforms and whatever tokens that they are or what they represent grow in popularity, well, then you can make pretty good returns. It's all dependent on your risk tolerance, though. But again, the benefit is that you can't be liquidated if you play at spot. You own it. So another way that you can find, you're probably saying, well, Bennett, these are a bunch of exchange-based tokens. HXRO is exchange-based as well. How about tokens that aren't, or maybe that are a hybrid? Well, we have Serum, which SBF has talked about a fair amount. And if you go to coinmarketcap.com and you look at any cryptocurrency, I got to say that they do a pretty good job at describing exactly what the token represents. You can look up any kind of cryptocurrency and you can learn so much about it. And if you read this and you say, huh, this use case looks like it's actually really good, and you wait for a really good price, and that's where you can get a really good buy, and you can also potentially make a fair amount of money. Another token that I've recently heard some stuff about is Helium. And if the popularity of the Helium hotspots and that project increases, then, you know, it would make sense for Helium to increase in price as well. Now, there is another part of this, though. With yield farming and different kinds of incentives, there's the Dr. Jekyll and Dr. Hyde. I don't think I said that right, but here's an example that can get kind of scary. Let's say that a cryptocurrency opens up for yield farming. A lot of people want to start farming that coin. Everyone buys it, right? And then the rewards dry up. And then everyone starts to sell it. And you actually bought it right after everyone bought it to get in on that whatever 0.3, 0.4% per day. But then that rate just drops massively. And then what you notice is that native token drops massively because people are selling it, because the APR is going down. I mean, the APY, pardon me, the APY is going down, and then that will, you know, maybe cause the coin to drop. So what I'm saying is basically you got to be careful with incentives, because you can't just think, hey, this thing, yield farming, daily income, everyone's going to want to buy it. You can't think like that. You got to think more, how many people have bought it? How much more growth is possible? Why would the layman buy this? And then if those questions are kind of muddy, then you have to ask yourself, potentially, are there a lot more sellers in this? You know, if let's say that yield farming is dying out and that the APY, the payouts are really going down, well, then that maybe would be a case, not financial advice at all, but maybe to short it at a perpetual market or to find some kind of play to get bearish exposure on it. That's something that's very speculative, but potentially quite profitable. So this has just kind of been all of my ideas dumped into one video. I hope that this was helpful for some of you guys, just kind of changing your thinking and looking more at the white paper, looking more at descriptions of what these cryptos do. Because if you really want to make really good returns with risk that's not terrible, because, thank you, PC. With risk that's with risk that, you know, you're not likely to lose everything. It could happen, but it's pretty unlikely, and it's a lot more likely you're going to get liquidated and lose everything. Way more likely. Well, then this could be an avenue you could look for. But do be very, very careful to read like comments, to read Twitter, because a lot of bots end up spamming links or spamming cryptocurrencies that you should buy. Don't do that. Never ever, you know, click on some random comment that says, "Oh, buy blah blah, it's poised for growth." Or like the classic scam comments that say, Mr. Jefferson made me 32 Bitcoins in one day. And then you see like a bunch of other scam YouTube comments on that comment that say, "Oh, he helped me too. He helped me." You know, we all know that. You know better than that to think that that's legit. So what I'm saying, to really sum this up, is DYOR, do your own research. Do your own research. Put money into things that you think have incredible use cases, and take time. Just be patient, take your time, and if the loss gets unbearable, then I hope you were hedged, but you could exit. And if the profit becomes quite insane, don't just take profit immediately. Go look at if there are still incentives available, or if you think popularity is, if you think the coin is still going to be quite popular, then you could let it appreciate and profit. But this is just a new way of thinking, brought to you by Bitcoin Trading Challenge. I'll talk to you guys in the comments. Happy trading.